Welcome back to the Dividend Diplomats YouTube channel, guys. Get that coffee, get the tea, get the water, look at Bert's haircut, looking fresher to death over there. My brother over there at the Dividend Diplomats, guys. We're talking to you about two dividend stocks to buy right now. Or are they two stocks that you're trying to avoid, even if they are dividend kings?
We're talking in the number two right now, so do two things for us. Smash that subscribe button, give this video a thumbs up, help us grow this channel. Get us to 20,000, please, people. Let's freaking go.
Oh, Bert, this goes out to the millions and millions of dividend investors out there, right, Bert? It's time to bring back some of the rock, some of the WWE flair right now.
Woo! That kind of flair. Maybe I'll have to bust out a nice robe here if we get to 20,000.
Yeah,
We'll get a nice diplomats
the
robe.
nature bird. It's the
Yeah.
nature bird.
All
Oh
right.
man, I can see
All
it
right.
now.
All right. So let's talk stocks here. Let's bring this back in a little bit. We are all about buying dividend stocks, growing our passive income so we can reach financial freedom. Build that passive income stream that grows and pays us money while we're sleeping without having to lift a finger. That's what it's all about. You know us. We talk about dividend stocks. We achieve our largest growth in passive income by buying dividend stocks and ETFs.
So guys, the S&P 500 is balmy right now. It's up over 5% within the first, let's call it like 40 days of the year. We're recording this February 8th. I'm sure maybe by now it's either bursted through 5,000 or it's maybe come back to reality heading into the weekend, but it is pushing the ceiling on 5,000 in the S&P 500. Just amazing. So Bert said it on yesterday's video. With the market rising right now, it makes it a little bit harder for dividend investors to find dividend growth stocks. And, we've been focusing a little bit more maybe on quality, maybe a little bit more on consistency, or even when companies have a little problem going on, sometimes there might be a ripe opportunity. So we're bringing you two stock opportunities today, right, Bert?
Yep, and quality continues to be the name of the game. I like how you focused on that. You call it out, and both of these companies have fantastic track records of increasing dividends. But they're also not just dividend aristocrats, are they, Lanny?
No, guys, they've been doing it for over 50 years apiece. So they're dividend kings. So those that are new to the channel, new to dividend investing, dividend aristocrats, 25 years, dividend kings, 50 years, without going into some of the extra detail for the criteria there. But you want your income to grow every single year. You want to be able to get to financial freedom. No, not only is that check coming in, but the check's going up.
That's right. So what we're going to do is we're going to talk about these two dividend kings. We're going to run through our screener, which has three metrics: P ratio less than the S&P 500, payout ratio less than 60%, the history of increasing dividends, where we talk about the 5-year average dividend growth rate and how many years they've increased the dividend. Although we have already teased that one. We've already said they're both kings. So it checks that metric. And then there's that bonus metric, the mother effing dividend yield.
The mother effing dividend yield, guys. And now I own both of these stocks. Bert, I think you own one out of two from what we talked about earlier.
That is correct.
That is correct, guys. So we're going to start into the stock that I mentioned actually on the top quick pick stock pick Monday last week. Or yeah, we're going into Hormel Consumer Goods, ticker symbol HRL. Down while the S&P 500 is up over 5%. They are down 10% this year through 40 days, down 10% for this dividend king, down 34% since February last year, guys. We're talking a third of the stock price just chopped, choppy style from WWE, if you guys remember that back in the late 90s.
Yeah. It's weird to see them below the stock price threshold where they are. That's usually, I always remember them above the certain share price, and they're oddly below it. It's kind of crazy to me.
Below 30 is what Bert's referencing right now. They kind of hung tight for a while at 30 to 32 towards the end of 2023, early 2024. But they just kind of like buckled and they are below that threshold now, guys. We're going to get into it. $29.47. Earning expectations for 2024 based on Yahoo's estimates, $1.54. PE is 19, so definitely not low.
No, but
Probably mid right
no,
now.
it's a point. I'm going to steal a line you had in our last video. If you're paying for quality stocks, chances are you're not going to have the lowest PE ratio. Quality is not cheap, even if it's cheaper than their historical mark. That's why we compare it to the S&P 500.
I appreciate that, Burton. Guys, the dividend's about 28 and a quarter cents. So 0.2825 quarterly times $4.13 a year. Payout ratio is high. I'm not going to lie, 73%. We've seen this with Procter and Gamble before. So we're seeing it now with Hormel. So they're at 73%. The reason why it's interesting is because, Bert, what does that dividend growth look like?
Actually, not bad. Their 5-year dividend growth rate is 7.5%. So that's pretty solid, especially for a consumer staple. And sure, it's probably been lower the last few years. We're not going to lie, but Hormel has at least demonstrated when they have the earnings growth, they're not afraid to juice shareholder returns.
Come on, guys, buy that pepperoni. What are you waiting for?
That's right. And we already said they're a dividend king. They've increased that dividend for 57 plus years. Delaney, tell us, what is their current dividend yield?
Now, keep in mind, before we see the dividend yield, their 5-year dividend yield on average is 2.36%. Their yield right now is 3.83%. So almost 150 basis points higher than that 5-year dividend yield average. Oof.
Ooh, that's great. And again, they're down 10% over the last year, down 1%. I guess before we summarize here, Lanny, you wanted to bring up a quick balance sheet metric for Hormel.
Yeah, quick current. I just want to see what the current assets were over the current liabilities based on the latest, 10Q that they released a couple months ago. It's 1.43x, so not too bad for a current ratio.
Not
We
bad at
want to
all.
see over 1x, so they're at 143.
Yeah, that's not bad at all. So here, let's summarize. 19 PE, 73% payout ratio, about a 7% 5-year dividend growth rate, 57 plus years of increasing the dividend with a dividend yield of 3.83%. That is Hormel, everybody. Lanny, who on earth is the second dividend king that you are going to talk about today?
So the reason why it's back on this list, Bert, I'm sure you know why. The price plummeted after some bad news that came out. Not bad news about the performance, really, but bad news about accounting work, which is funny because Bert and I are both in the same industry. But they came back up about 5-10% from when that happened, but now they're coming back down. So we're talking Archer Daniels Midland, ticker symbol ADM, guys. And Bert, do you want to talk about kind of what they're going through right now a little
Yeah,
bit from
someone just flipped their debits and credits around here. They left out a couple decimal points. No, they got smashed with an accounting scandal. And they had a major acquisition a few years ago, and it turns out there was some funky accounting, to say the least, about that. Executives, CFOs on leave, I believe. I can't remember if he's been terminated, but he's at least gone from the company right now. He's gone.
he's on leave still.
No, he's on leave, so while they finish their investigation, but a lot of it was around fudging the numbers for this new acquisition so that the executives could potentially hit their golden
Big
parachute.
windfall. Yeah,
Yeah.
yeah.
So obviously the SEC is looking into it. ADM self-reported it. The DOJ is looking into it. Everybody's got eyes on it. So that's the big news swirling. That caused the stock price to tank. I believe it was down 20% in one day, or nearly 20% in one day.
Yeah, 20% one day. Yep.
I mean, look, it's a scandal that nobody wants to see. But like, what did ADM do just a few days after this scandal? That was the
They said, all right, yeah, after all this beer, hold my beer. We're going to increase our dividend 11%. 11% dividend increase they came out with just about 2 weeks ago.
Yeah, so that's when I started buying it. I grabbed that week, I grabbed 20 shares because of all the news. I just said, screw it. I'm going to add to my position and keep juicing it up. So I'm pumped up that this is back on your watch list, Lanny.
Yeah, back on the watch list, guys. ADM, $52.70, guys. We're going to use a conservative EPS estimate, about 583. I think management said 690. So we're just going to discount this down to $5.83. Even when you do that, their PE ratio is at 9. Question, guys, like this video, but is this too cheap? Is this a value trap? We'll get into that. Let us know in the comments. But what's the dividend payout ratio look like for this dividend king?
Annual dividend is $2 per share. The payout ratio is only 34%. So that's the nice thing here with ADM, with all the uncertainty around earnings, even taking a conservative EPS projection, that payout ratio is still 34%. So even if you cut that conservative projection in half, you still barely have a payout ratio above our 60% threshold.
It is, yeah, still safe. Yeah, cut it in half and you're still fine. 5-year dividend growth rate on average is 6.76%, but the last 2 years have been double digits. So, it's funny how Hormel kind of doesn't trend with their 5-year average, but Archer beats their 5-year average. So, yeah, you average them both out, right?
Yeah.
50 years of growing dividends, though. Now, Bert, with them being down 28% this year, what is their dividend yield?
Not 1%, not 2%. It's 3.8%. So it has swollen up well above their 5-year average yield of 2.64%. So nearly 1.2% above their 5-year average, which is wild for Archer Daniels.
Yeah. Yeah, two companies well above their 5-year dividend yield averages. Their current ratio from a balance sheet perspective is 1.68x. So current assets over current liabilities, just a quick metric for you guys just to kind of show how liquid they are. But in summary, 9 PE, 34% payout ratio, 676% on the dividend growth, 50 years of growing dividends, 3.8%. Both yields between them and Hormel, we'll put them on the screen, higher than the S&P 500, higher than their 5 yield averages. Both have grown dividends for over 50 years.
Yeah, so here we go. Hormel, ADM, Lanny, it's your watch list. You get the first honors. What are you doing with these two positions?
Well, I grabbed a share of Hormel,
Boom.
$29.91. So, wouldn't mind grabbing a share of each at these current prices right now, Bert.
Freaking love it. And obviously I've grabbed ADM. I grabbed 20 the week of the scandal and it's come back down to the 52 range after it popped up a little bit. So might not be a bad one to nibble on here or there, especially if I just want to buy something. I have one of those F-it days. ADM's not a bad one. $50, grab a share. Hormel, I already started one new position this week with APD. You can check out our last video if you haven't already from yesterday. I don't think I'm going to be starting 2 positions in 1 week, especially after I was just so pumped up to clean out 4 positions. I don't think I can come back and be like, hey, let me add 2 more.
Bert's like, I'm looking and I'm liking.
Yeah, but it's not bad. Those metrics look amazing too.
Oh my gosh. Well,
Yeah.
guys, what are you guys doing? Are you guys buying Hormel? Are you guys buying Archer Daniels Midland stock at these stock prices? These 50-year plus dividend kings, well above their 5-year averages, as the S&P 500 is at all-time highs, about to break through 5,000. Let us know below.
And already subscribe to the channel. Give this video a thumbs up. And Lanny, what do we need to tell these diplomaniacs out there?
If you smell what the dividend diplomats are cooking. No, that's not it.
I mean, you can
To
tell
be the
them that.
man, you got to beat the man. Woo!
No, I don't think that one was
No,
it either.
best there is, best there was, the best there ever will be.
We can end on that one if you want.
Guys, you're either with us or you're against us, Jack. That was Bert, the Hurt, and Lanny from the Dividend Diplomats. Over and out.